she can actually go and get a standard mutual identification. Her shop will have an identity.
But she's only done this once. It's
Yeah,
not
you
every
see-
day
Yes.
event.
What-
That's not likely to change.
What happens
her
is by the time
profile
she gets
drastically.
500,000 naira,
Yes.
and her wealth has increased 500,000 naira, it's expected that she can scale up her profile.
Remember, it's only this one time. If it happens 5 more times, her profile changes.
Yes.
You don't
And
make a
anyway-
million in one day and then your profile changes for the rest
Yeah.
of your life.
And anyway, she believes more in the Isuzu guy who comes round on his motorbike to collect the money and fill a little card or whatever for her.
Interestingly, the arrangement they have, like Wole said, includes an incorporation of such structure like the Isuzu. The Isuzu,
does?
yeah, basically those who can become the agents of the bank. That's why they said for the low value customers, it's either the person comes directly to the bank premises or can actually open the account through an agent. So in the case of such agency relationships, which is why he said there are risks involved in the agency relationships, the Isuzu guy will now open direct accounts in the name of his clients with the bank.
Okay.
You understand what I'm saying?
Or in the name of the association.
No. This time around, direct names of his subscribers.
Okay. Which leads me to the question, those agents currently, what do they do with the money that they collect from the women in the market? Do we happen to know that?
Well, if you ask me from during my university days, when I was in University of Lagos, I had a lot of my relations who were in Yaba, and they were using the Susu. And I wanted as a business student, and I had to carry out some level of study to know what was going on. See, basically what those Susu people do is that they lend those funds.
Oh.
See, basically what they act as aggregator. So when they gather the funds, they look for a business person within that business zone who has the capacity to pay back, and they get flat fees. And remember, for the deposit mobilization aspect, the liability side, they pay no charge. They actually charge commission, and I can't remember how much it was, but it was something like every month you make contributions, and they take either a day contribution as their fee for the pain of coming to collect the money directly from you and preserving it for you. Then they now lend that money to a deficit unit, to a good business person who pays them a flat fee of 5% per month. So on both sides of the balance sheet, they make money. And that's what they.
So these guys are one-man banks. in
Yeah,
other
I think what they are doing is operating as a bank without having a license to do that. So technically, it's an illegal operation. Where they perform functions and services to the society, but it does not justify it, really. But with respect to this regulation, let's even start from where were we before this new announcement. Before now, we used to have a situation where people go to the banks to deposit money, and if that money is more than 500,000 naira, the banks had the responsibility to report it to the NDLA and I guess to other, monetary authorities. If it is above, I think 1 million or thereabout, for a corporate, they will do the same. So it's not as if people have not been, or the industry itself has not been KYC conscious and making sure that they can track money and try to pick out dirty money from the system. But what we see now is you have 3 tiers. I ask myself, between 200,000 and 400,000, what is the difference? One. Number two, what is the risk that we are trying to protect? If you have said 500,000 tier 1 and anything above 500,000 is tier 2, maybe it's a little, refined, it's a little, moderated. But when you have different layers, such that when you want to move from 200, you probably move to 400. I don't believe is sustainable. That is on one
Now,
hand.
do you think that this new policy will encourage more people in most of the people being referred to are those in the low level? Will it encourage more of them to actually open bank accounts?
The truth is, it will, for fact, because it's been tested. Before the CBN came with this policy, some banks on their own, out of competition and trying to grow the retail balance sheet of their customer base, they've been eliminating a lot of the opening balance requirements. What they couldn't do was the KYC documentation, which was driven by the central bank. But if central bank had left a lot of these things to competition and industry, practice, then chances are that a lot of these things will still happen anyway. It's just like the cashless society. If CBN didn't enforce it the way they've done it, it will still have happened in the long run anyway. So it's either you let it go or you fast track that reality. I can pick a bank, Guarantee Trust Bank. At a time, you can walk into the bank and open an account without 10 kobo. And what happened? A lot of people bombarded them with account opening requirements. And at the time, they couldn't cope. So there was a guideline that says anytime from 2013, I can't remember the exact month, they are going to increase the account opening requirements probably to like 20,000 or 10,000. So my challenge is not really whether it is the right policy that will drive financial inclusion. Yes, it will. More people will come to the banks, but will the banks be in a position to service them? That is the problem. The way the banks are structured today, they are not structured to play that role.
Okay, maybe we should check with Mr. Chukwu. Do you have the same fear, or do you think that the banks in Nigeria might have the capacity to be able to accommodate this? And while you're thinking of a response to that, I'm also wanting to ask that there's a statistics that says that 47.30% of population around sub-Saharan Africa are children, and a large percentage of them are exempted from the bank or banking in sub-Saharan Africa. What do you make of that statistics in terms of being able to include them in the financial system that engages them with saving their money?
Okay, let's take the first part of the question.
One, yes.
You see, the challenge that the customers have in patronizing the banks are multifaceted. Beyond the entry barrier of account opening balance, there are also other challenges. Primary among those challenges include location of those banks. My village is the nearest bank is about 20 kilometers away from it.
Oh dear.
And you can imagine there's no good road.
Where is this village?
Ugwe.
Go 20 miles away from
Ugwe in Abia State. There's no good road.
In Abia State.
Yeah, so if you have if they make sales during market days, they have to take Okada to go 20 kilometers to a bank. That is not viable. Two, you have to look at the cost of transactions in the banks. If the bank charge on average 0.5% of the volume of the amount of money you have when you want to withdraw it, that's what they call 5 per million, 5,000 naira per 1 million. If your line of business is low margin business, that could completely erode your margin. So you have to look at one, access, locational access, two, cost of transactions. And then we also have to deploy what other countries have done to improve on inclusiveness, like South Africa. That's what they call bank on wheels. I think one or two banks have tried to do it, and I don't think they succeeded. In the case of South Africa, ABSA in South Africa goes to rural markets with a mobile bank. Traders, villagers will make their lodgements into the bank and withdraw, because on the market days they are there in the market space to actually transact their banking businesses. In Nigeria, the market days are 4-day cycles. So if you have the mobile banks, it's easier for the rural people who are, because when you talk of the number that is excluded, it's largely the rural population that is excluded. The urban population, a reasonable percentage of them use banking services. But because Nigerian population is still more than 60% rural, so when you look at the statistics of 87.8 million adult Nigerians, and only 31.5 million are using bank accounts. You also look at others close to that 60-40% proportion. So you need to improve on those other assets for them to have higher level of inclusiveness. So beyond the minimum threshold, beyond the challenges of meeting the KYC requirement for opening an account, you need to address those other factors. Then your second aspect of your question, that 47% of African children are excluded from the banking system. You see, the lot of contracts in Africa, in most Africans adopted the English law system, and a lot of contracts stipulate that below the age of consent, you can't enter into a valid contract. And bank accounts are valid contracts.
Well, let me clarify.
Okay.
The statistics are saying that the 47.30%, they actually refer to as children, but they are within the range of 15 and 25. Most of them are in post-secondary education or just below the tertiary institution level.
The way I will look at it is this. That class you just mentioned, that age bracket you mentioned, are mostly non-income earning group in Africa. And if you look at the level of unemployment in Africa, over 40%, for instance, in Nigeria, over 40% of Nigerian youths within that age bracket are unemployed. So that could explain why they have no income to go and open an account. I remember when we were in school, a lot of us opened an account because our parents were sending money to us. But subsequently, when we left the school system and a couple of us were unemployed, those who were unemployed, the accounts went into dormancy. So if you have a high proportion of youths, because that class is actually the youth population that are unemployed, about 40% of your youth population is unemployed, then the tendency that they have financial transactions that go through the banking system is very minimal. So that could be a major challenge. Unlike in other countries, where even if you're unemployed, you enjoy social security benefit, and that social security benefit will pay to you through a banking system.
Yes.
So you are compelled, in order to make your claims, to have a bank account. So unemployment is a critical factor in Africa that accounts for the high preponderance of youths not having bank accounts.
Okay. All right.
But it appears to me that this new CBN, you can open an account with 0 kobo, might actually motivate them to, because now you don't need anything to open those accounts.
Yeah, but you open the account and you don't operate it for, is it 6 months or something?
Yeah, it will go into dormancy. It's still your account. Anytime you bring money, you activate.
Okay. Well, thank you very much. It's clearer to us now, and we must say that, as you have said, this will encourage more people and it will encourage inclusiveness, which is what the central bank is trying to do. Thank you very much for coming, Mr. Johnson Chukwu, who is MD, Carry Assets Management Limited, as well as Mr. Wale Oluwo, CEO, Investment Banking, BGL. Thank you very much for coming to shed more light on this policy for us. Sunrise will return in just a moment with yet another very interesting topic.